Good afternoon. We're going to do a trade review today. A little bit different than the format that I've done the last few times. Going to just go over the morning game plan notes. Morning game plan is just my written summary of my notes for the stocks that we want to trade on our desk for a particular day. And what we do is at 8:45, or I should say 8:50, before the market opens, we go through big picture, stocks in play, second day technical plays. I'm just going to go over the fresh news plays, the stocks in play. There's 4, there's plenty there. I traded 2 of them, other 2 were traded by many on the desk, and I watched them, and we'll just go through. So the first one on the list, and I did these actually in order of what I thought were going to be the most in play and the best opportunity, from best to last. On the first 3, the 4th one is actually just a noob. I thought this would be an easier trade for younger, less experienced traders to trade. And each day we try to at least have one of those out of the in-play names for them to take a look at. But the first one was JCP. It was very apparent from the pre-market volume. It was very apparent from the price action that it was going to be good. I started looking at it. It had already reversed and got it above 2150. This was the support level I had for it, 2230. Had for resistance in 23 and 24. My notes were initial negative reaction to earnings erased by conference call, which meaning it had a positive tone coming in. Trading plan was looking at the long side of above 2150. So let's see how this one played out. So here's JCP, and actually what we want to do is take a look at the 10-day to give us context. So here's our 30-minute, and here's our 10-day. So we can see coming into earnings, it was a stock that had kind of bottomed out here around 2050 and was working its way a little bit higher. Actually, let me go even a 20-day. This gives us a little bit more reference, and this gives us a little bit of a better picture. So it had come from below $20, had run up as high as 23 recently, and you can see I had that as a level up there. And then also 24 in the morning sheet I was looking as a possible resistance. And so what happened was the earnings came out, the numbers weren't good, so the initial reaction was negative. But then the conference call started, and people liked what they started to hear from the CEO. And in the pre-market, it was bought very aggressively right at 8 o'clock. And for those who aren't familiar, in the pre-market, when volume starts to come in, is right around 8 o'clock, and that's when the pre-market trading becomes less risk. And as we zoom in on this, and then I'll even take you to the tick chart, let's go to today, ticks. What you can see is the pre-market, so right at 8 o'clock, you can see that volume kind of starts to come in here, see the spike in volume. And then really into this up move at around 8:10, just starts to be bought very aggressively. Pre-market is for more experienced traders. Traders have been trading probably a year plus. People have been trained how to trade. This is a time, though, and this has been the case I think for the last couple of years now, that I feel like this is the best time from a risk-reward standpoint if a stock's very in play. This stock did millions of shares in the pre-market. Once it went from negative to positive, I thought it was worth trading on the long side. And you can see when the morning meeting started, it was right around this 22 area, and some people on the desk were long it, and they caught this uptrend. I'm guessing they got out probably somewhere in here when this 2340 failed, but continued to trend higher. By the time the market opened, had already gone from my 2150 kind of to 22 buy area already to 24. So I wasn't really looking at that point to trade it on the long side anymore. I thought kind of best case scenario, maybe it could get to the high 24s. So at that point I was actually looking for some type of failure and to trade it on the short side, at least back for a move to $23 a share. And sometimes you gotta take what it gives, the market gives you. And I'm not trading in the pre-market, I'm trading after the market opens. My trading idea was to be long in this area down here for a move up to 23, possibly 24. Market opens, it's here. I'm not going to all of a sudden say, hey, I'm just going to jump in on the long side. And maybe if at 10:30, if it was still consolidating above 24, maybe I would have. But that just was not a good risk reward for me. So what I did was right on the opened, I looked for some type of failure, and we saw that around 9:38, and I got to go to the tick chart. My first trade in it was, saw some selling here around 55 cents, and I got short. I was keeping the small position, quarter-size position. I didn't want to be long, and everyone who knows me knows that I like to trade with the trend, and if a stock is strong, I trade it long. If it's weak, I trade it short. But this one was overextended, kind of past most of my price targets, and as soon as I saw something on the tape in terms of selling and having a little bit of trouble, traded it on the short side. Then I had a little bit more trouble, basically came down to this 24.20. I got a little bit more aggressive, hitting some more here, came down to 24 bucks, and I covered a decent amount of shares here. These extra shares here I covered into this, and then it started to come below 24, so I reshorted and covered down and got flat into this move here into 60 cents. And I was flat and just waiting for a spot to reshort. Again, I wasn't really relying on the fact that it was going to come all the way back down to this 23. I felt that I did a good job of taking on a little bit of risk here. When it started to move lower and kind of break this pre-market uptrend, that's where I added right into here and just traded around the position. Again, I don't believe in trends in the first half hour, so I was perfectly happy then to trade it on the long side. We'll get to that in a second. But in the meantime, I covered here. It broke lower, and I don't remember why I didn't short it here. I think maybe I was talking to some kids or doing something else. But the next trade I made into it was making a trade on the long side. And that was actually, it wasn't this second move here. Funny enough, I didn't actually get long there. But let me just zoom in and I'll show you what I did here. So this move was pretty steep here, and I couldn't get, I was bidding at I think a nickel or 4 cents or something like that, or maybe 3 cents. I didn't get hit. So what I did was, this was my target, 23 was my target. I couldn't get hit, so as soon as it started to show some strength here, I actually got long here at 15 cents. And you can see it came lower a few cents, but then started to trend higher, and I just took my sales into this up move, sold into the high 20s, sold into the 30s, got flat, I believe, at 37, 38 cents, and then I was looking to get short, and I kind of got screwed by a large offer that came in here. Basically what happened was I think I was up at 48, 49 cents to short, and a large offer of 24,000 shares showed themselves, and that caused it to come right back down. Second time it came down, for whatever reason, I just decided I wasn't interested in buying. I thought maybe it was going to fully reverse, and was completely wrong about that. It actually, the second time was actually much better. Here's the 3 minute. You can see that's right here. So this is where I got long initially. I caught this little scalp long, came back down, and I didn't buy, and it actually went up a point. What did I do? I actually looked to short, starting in the 70s. I think actually my initial short was here, and didn't come off that much. I don't remember if I covered any. Then it spiked up higher, and I had a quarter position on, and I got very aggressive into the 24 level shorting. You can see what it looks like on the tick chart, and it had come down. Maybe I covered a little bit here in the 40s, but when it came up here to the hole, I quadrupled up, and my risk was tight. I was going to cover it if it started to hold above 24 bucks. I believe my prints were at 94 or 95 cents here. It didn't quite touch, maybe it did touch 24. And what I did was I waited for this move right here to cover a quarter of my position, to cover my risk. And then it started to trend lower. And I covered a little bit more in the 60s, 50s. And that was it. And I was flat by this move all the way down here to 40 cents. So I did not capture. I didn't capture. I was still bobbing and weaving, and I actually probably was thinking about getting off the desk. So I didn't capture this move all the way back down to 23. I was flat in this area right here. Actually, I thought they were starting to buy it, and it looked like to me that it might turn back up here. And I noticed actually some people on the desk, when it dropped here, some people got short, but then it was holding above 30 cents again, and I wasn't convinced it was going to trade below $23. But when it did come back down to 23, and dropped out, that was kind of my last trade in. I was, at that point, I probably should have been off the desk already, but I was still hanging out, and it was a very good open. This was a good stock, and right here I got short some, popped back up. I actually covered quickly, and I was long for a split second, but thought better of it and got out. And as soon as it failed here to get above 10 cents, I reshorted it at 5 cents and covered some into this down move here into the 60s, and then I actually got flat into this little spike down here at I think 55 or 54 cents. One of the trainees was laughing at me, he couldn't believe I got that print. Yeah, I actually got some good prints today, so I don't remember, it was somewhere in here I got this print and immediately spiked up to 90 cents, but I was actually already leaving the desk, so I didn't re-short it. I know those who didn't get covers down here eventually were able to cover into this down move. And I'm not sure what they did the rest of the day. Again, I was off the desk for this. If you look at it from a 5-minute perspective, you definitely could have made the argument that after it bottomed here at 22.40 or so, tried to roll over again here at 22.60s. Once it came up and started to hold above the whole number, you definitely could have traded this on the long side. That would have been fine. Breaks the downtrend, higher low. You know, this area right here would have been fine to trade it on the long side. Never really worked out. Never got much above 60 cents here, and then didn't go back up to $24. But that would have been a fine play. But again, to recap, best trade for me, I thought was the pre-market uptrend. It was very liquid. I did capture this short right here. The first one, I did catch a little quick long scalp. I didn't catch the good reversal here, but I did capture this short. So each of the trades I was involved in were profitable, with the exception of right here when it put below 23, I got stopped out. I had to reestablish, but it was a small loss, and then I caught the move down into 50 cents. So overall it was good. I think it was like 4 out of 5. It just shows you how good the stock is. It's not necessarily me trading it that great. It was just the opportunities set themselves up, and the stock was very liquid. The second one on the list was MNST, Monster.com. Was trading lower in the after hours yesterday. One of our traders was actually shorted, and I thought this reminded me of QCOR, QCore, and HLF. I thought this one, you know, I thought if it had, well, this is what I said in the morning meeting, trading lower on Attorney General, I'm looking at a short if it's holding below 58.50. My thought was, holds below 58.50, risk maybe 30 cents there for a move down to 55, and then if it holds below 55, I was thinking maybe even 52, 51. That was my thought process. I'll show you what some of these stocks look like. The QCore, it's kind of like, boom, gets hit with something, boom. Those are some pretty severe moves. HLF, you know, things can get pretty ugly when people start, you know, when stuff comes out on these stocks and these stories come out, and that's kind of was my mindset on MNST. And here's kind of the 3-month look at it, and you can see it's, you know, it's in the high 70s. It's working its way lower. All of a sudden, it gaps yesterday on earnings, and the next day it's gapping on this, you know, this Attorney General story. These things can get ugly in a hurry, and that's why I had as my number 2 idea, even though sometimes it can be a little bit nasty. So here's yesterday's price action. It actually had worked its way a little bit higher. It was starting to look a little bit more bullish, but at the end of the day, rolled over. The story comes out, and they hit it down to 58. And where did I get my 58.50? Well, I wanted it to show me that it was really weak. I wanted those after hours prices. It, you know, it came off to $58. I wanted it to hold below 58.50, and if people are willing to commit to it on the open at 58.50, I thought, hey, this could roll over to $55. But that was, you know, that was kind of the first possible setup. My feeling on this is, though, and again, I think some people made some money on this, is right on the open. Everything is so thin now that if you're gonna take this trade, and you see it's printing, you know, there's a couple of straggler prints here up in the 40s. If you're gonna take these trades right on the open, you gotta be really good at reading the tape, and you gotta understand that if you think your risk is 30 cents, it's probably 50. And so to me, looking at this, the first trade is really, you see the weakness. It fails at 58.50, which is what I wanted it to do. It retraces clearly on the tape. You can see in the first minute it's having trouble here at $58. But if you do put this short on here at 58, you're really risking to above the half. You're probably risking, you know, maybe you cover half above a quarter and the rest above the half. So you're risking probably on, if you average those 2 stops out, around 40 cents. That's your risk here. So if you're putting this trade on here, you better be damn well sure that you're looking for the move down at least to $56. And some people, you know, they got shorted, and the first wave came down to 57. It popped up to couldn't get above the half. So this is methodical. People looking to short it into the half, it never gets above it. Next move. The other spot where you can hit this is below 57, and again, if you hit this here, this is your momentum trade. You got to be quick. Pops back up, you got to take the loss quickly. It's a Momo trade on the open. Next move is down about another 70 cents. Pops up. I wasn't in it. I can tell you right now that this area right here at 80, this is a spot where I'd be very careful. It was only above it for a few seconds, but ultimately, if I held any of this position after this last down move, I would have been stopped out into this right here. It fails to hold at these lower levels. So here's this is like the 3 minute, just so you can kind of see what it looks like. And I'm sure, I know after this pop back up here, people were getting involved. If you notice, it's like 57.20 here. I guess I'll go back to the tick chart to see what that looks like. So I mean, if you're a really experienced trader, you'd probably notice, oh, it got above 20 cents, it's coming back down in the hole. Oh, it spiked up here again, it's not getting above a quarter. It's spiking down to 80 cents, it's coming back up, it's not, and this looks really thin here, it looks kind of disgusting. But the idea is, if you're a really good tape reader and experienced trader, maybe you make that play there. Otherwise, here is the more technical trade, which was called out on the desk today by Shark, and it was a really good trading idea. And he basically called out, it was around 10:30, he's like, I'm short against 56.5. My stop's above 60 cents. Unfortunately, he got stopped out on this trade. But to me, this is an example of just a great trade. Stock is super weak on the open, comes back up, it's having some trouble. It's moving sideways down here, so he's got his short on probably from in the 30s, maybe 40 cents. And look, it turned. It went up here. It started to hold higher. He stopped it. He got stopped out. The only thing you can do in this situation is take your loss and then maybe say on the 5 minute, hey, it's not holding above my level. It's not holding above the half. Maybe I'll try to get back in. Maybe only quarter or half position size, just nibble. And then if you get another consolidation lower, let's say below $56, maybe you add to it. In this case, it came below here, and if you added there, you probably would have been stopped out here. Next time down, holds a little bit lower. You know, wasn't exactly the cleanest thing, but if you go to the 15-minute view and you decided this day, you know, the original idea, short 50 at 50, you said it comes back on the 15-minute, it's having trouble here. See on the 15-minute how it's not closing above 30 cents? And this is more of a swing trade, and if you're putting this trade on, one of the traders on the desk does have a swing trade in overnight position. He looked at it as a swing trade, and he said, hey, it's not holding above here in the 15-minute. Until it does, I'm short. And even into the close, when it came off all the way to 53.5 and came back up a point on him, he's in it. Look at the 15-minute trend. It's still trending lower. So again, we trade on different time frames. We like to tell people that if you have a good trade to hold position, look at the 15-minute time frame. Is it maintaining that trend? If it is, stick with the stock, because the stock can see $50 on Monday. It can gap down another few more points, and this flush can continue under my thesis that it's similar to a Q-core and an HLF. But overall, if you were on the tighter time frames, it was a little tricky. Let's go to FIO. This is FIO is the one that I traded today. I'm going to try to speed these up because I think I've been talking for a while. FIO 25 was a support level, 26, 26.25, 26.5 resistance. My inflection point was 26. Above there on the open, I want to trade it long. Below there, short. Very positive reaction to earnings. I thought they really could have squeezed this one. And look at this, looking at short initially against 26, but we'll see how that plays out. I don't think it ever got below there, so that's why I was focused on the long. So there you go. Right on the open, you can see it broke the pre-market downtrend, and so that's why my focus changed to the long side. So you can see pre-market, we had the downtrend. I thought if it failed right on the open here at 26, it would be trending lower and maybe some quick profit taking. But the initial reaction is up on the open from 26, and I started to try to trade it on the long side. And I was a little bit of a wuss on this one. Again, there's been no liquidity on the open. Before even the whole night thing happened, there's been no liquidity on the open. I'm being very careful. not to lose money right when the market opens. So, but I see the initial drive up to 60 cents. I started bidding in the 30s, and I actually pulled my bid. I was like, you know what, do I need this headache? I'll buy it back down at 26. It turned out my initial instincts were right. It was bought in the low 30s, which would have put me in a good position of strength to trade it on the long side, as opposed to what I did, which was once I saw it go up to 27, it pulled back to the 26.30s, then it went up to 27 again. I noticed it held, and I actually said to my boy Sammy, I said at 26.5, he took sales into this. I'm like, buy it in the pullback to 26.50. It had a lot of trouble breaking from there. You see that right here on the tape, or on the ticks. I'm not showing you the tape, but I can't remember if he bought here, but then it started to, I noticed it was accumulating in the 60s, and this is when I started to get involved. I'm like, look, it's above 26. That was my thing. They're buying it here in the 60s. I started getting involved here in the 70s, and I caught this up move. And this is kind of what I liked. I think I actually tweeted it and put it on StockTwits. But basically, I liked how they were it was holding higher. They were accumulating it higher. Or maybe, yeah, I was already in for this. I did take sales in this. I yelled at guys, take some sales. You can buy it back at 27. But then I started to, I reloaded when it came back down here to $27. It actually went up again. And there was a big seller here at a quarter, so I sold some again. And then it came back again, and I reloaded again. And eventually I was off the desk, and I got stopped out. So here, let's see, I'll show you where I got stopped out. So here, this actually shows it much better. So I was getting like long into this, and I caught this, sold half the position, or maybe even 3/4. Came back down, bought it back, sold again. It was just making the spread here. This is nice. This is like a 40-cent spread. Came back down again, so I bought it again, because this is my line here to get out below 80 cents. And I was working the spread here a little bit, 20-30 cent range. Came back down here. This is where I got a little bit pissed. I couldn't get it. They dropped the 90-cent bid. They immediately didn't go down. I bid like 91, 92. I didn't want to pay the offer. And so this next 30-cent up move, I wasn't able to make the spread on that one. Finally, I was off the desk. I got stopped out here. If I was on the desk, what would I have done? If it doesn't hold below my stop out price, I get long again. So I would have nibbled on the long side again, started holding higher in the 80s. Probably wouldn't have bought here, but once it started to show some strength into this, above 20 cents was my price. Where it failed prior, this is where I would look to add. It's hard to say. I guess at 50 here, if it wasn't, 50, take some sales definitely. Pulls back, makes a higher high. I would have thought they would squeeze it into the close. I'd probably still be long the stock now. It never came back below 80 cents. But again, I was stopped down into this while I was off the desk, so I couldn't rebuild the position. But I thought if people were on the desk, there was a chance to catch this move here. This looks a little bit nasty. I'm sure when it made the new high here, actually didn't make a new high, but if people weren't taking sales into this, and they got caught in this, that's nasty. There's no other way to describe it. It looks like somebody sold about 100,000 shares. Once that sell order was done, it made a new high. And then again, it was sold into the close. But overall, from a big picture perspective, it's a very strong stock. Let's see what it looks like. Let's go with 1 year on it. And you can see, actually I'll go weekly on you. So here's our weekly on this bio, and it's broken the weekly downtrend. What would be really constructive for this at this point would be just to continue to have closes above $26 a share. Even above 25 would be okay, but if it closed, continues up here, I think you'll probably, you're gonna see at least $28 a share on this one soon. And if things go a little bit nutty, maybe 29 to 30, but certainly at least 28. So those were the stocks. I'm actually not going to talk about NVIDIA, but it's just been a long day and a long week, and we covered 3 good ones, so hopefully you enjoyed that, and I'll try to do another one next week. Thanks.